ArcelorMittal, a global steel titan and one of the world's largest steel producers, has recently captured the attention of investors and market watchers alike. The company, with its sprawling operations across continents and a legacy of industrial might, has seen its stock soar to unexpected heights in a remarkably short period. In fact, ArcelorMittal's stock has surged by an impressive 52% this year alone, outpacing many of its industry peers and surprising even seasoned analysts who follow the steel sector closely. This dramatic surge has been fueled by a wave of optimism surrounding the company's European operations, which are seen as a key driver of future growth. Adding to the excitement, a major policy proposal from the European Commission has sent ripples through the market, further boosting investor confidence. The proposal, which is currently under discussion, aims to significantly cut steel import quotas into the European Union. By limiting the amount of foreign steel entering the market, the policy is designed to protect domestic producers like ArcelorMittal from global competition and price pressures. Investors are betting that these changes will reduce competition, allowing local steelmakers to ramp up production and potentially command higher prices. This expectation has been a major catalyst behind the stock's rapid climb, as market participants anticipate a more favorable environment for European steel. However, such a dramatic and swift rise in share price has also sparked debate and concern. Some experts are questioning whether the current wave of optimism is truly sustainable, or if the market is getting ahead of itself. The market's re-evaluation of ArcelorMittal's worth is largely based on anticipated benefits from European policy changes, rather than concrete results that have already materialized. As a result, this rapid ascent in the company's valuation is prompting a more cautious reassessment by analysts and investors alike, who are now weighing the risks alongside the potential rewards. Ultimately, the future of ArcelorMittal's stock will depend on whether these high expectations are met with real-world results, and if the policy changes deliver the intended boost to the European steel industry. For now, the stage is set for a more measured and thoughtful market analysis, as all eyes remain fixed on the steel giant's next move and the unfolding impact of European policy decisions. UBS Global Research has recently made a significant move by downgrading ArcelorMittal's stock rating from buy to neutral. This decision marks a notable shift in sentiment from one of optimism to a more cautious stance. The downgrade comes after a period of strong performance for ArcelorMittal, which had previously enjoyed a favorable outlook from analysts. Over the past year, ArcelorMittal's stock has experienced an impressive rally, surging by 52%. This remarkable growth has attracted significant attention from investors and market watchers alike. However, UBS now believes that much of the anticipated future gains have already been factored into the current share price, making further substantial upside less likely in the near term. According to UBS, the stock's current valuation already reflects the positive impact of recent European policy changes, such as regulatory reforms and economic stimulus measures. These developments have provided a boost to the European steel sector, but UBS cautions that the benefits may now be fully priced in. Despite the downgrade, UBS actually raised its price target for ArcelorMittal to €35.4. This adjustment signals that the bank still views the company as fundamentally strong, with solid management and a resilient business model. However, the new price target also suggests that the stock is now fairly valued, leaving less room for dramatic appreciation. The downgrade, therefore, serves as a warning to investors that the days of explosive growth may be behind us, at least for now. Those considering new positions in ArcelorMittal should be aware that the potential for outsized returns is more limited compared to earlier in the year. For new investors, this means the opportunity for significant upside is now more constrained. The stock may still offer stability and moderate gains, but the easy profits from the recent rally are likely in the past. UBS also pointed out that ArcelorMittal's performance outside of Europe has started to show signs of weakness. Key international markets are not delivering the same robust results as the European segment, raising concerns about the company's global growth prospects. The health of ArcelorMittal's global operations is closely tied to regions like North America, Brazil, and India. These markets are crucial for the company's long-term success and overall financial health. However, each of these regions is currently facing its own set of significant challenges, such as economic slowdowns, fluctuating demand, and regulatory uncertainties. These headwinds are offsetting the strength seen in Europe and contributing to a more mixed outlook for the company. As a result, the overall picture for ArcelorMittal is less robust than it was just a few months ago. Investors are now grappling with a more complex and uncertain environment, where regional disparities play a larger role in shaping the company's prospects. In summary, UBS's downgrade is a call for caution. With regional imbalances and a stock price that already reflects much of the good news, investors are advised to carefully weigh the risks and rewards before making new commitments to ArcelorMittal. UBS's downgrade centers on valuation concerns. ArcelorMittal's stock, after a 52% rise, is now fully valued. The EV/EBITDA multiple shows the stock trading at a 40% premium. This premium suggests high optimism is already priced in. Elevated valuation increases investor risk if expectations aren't met. The downgrade to neutral is a call for caution. The risk-to-reward balance has shifted unfavorably. ArcelorMittal remains strong, but its stock isn't a bargain. The earlier opportunity has passed, warranting a patient approach. Investors should be wary of potential corrections. ArcelorMittal's stock surge is driven by European Commission's import quota cuts. This policy could double European EBITDA by 2027, boosting profits. However, Europe accounts for only 30% of total EBITDA. The market's focus on Europe overlooks global challenges. Benefits are delayed, with implementation taking 6 months. The policy's impact is a future story, not immediate. UBS concludes the market overestimated the policy's effect. The European narrative doesn't fully reflect global realities. Investors should temper expectations with broader company challenges. ArcelorMittal is grappling with a series of mounting challenges in its North American operations, where profit margins have been steadily eroding over recent quarters. The company, once a dominant force in the region, now finds itself squeezed by a combination of external pressures and internal inefficiencies. EBITDA per ton, a key measure of profitability, has dropped sharply from $180 to just $115. This significant decline underscores the intense financial pressure facing the company, as rising costs and weaker demand take their toll. One of the most persistent challenges has been the Section 232 tariffs imposed by the United States. These tariffs, designed to protect domestic steel producers, have raised the cost of importing steel from Canada and Mexico, making it harder for ArcelorMittal's mills in those countries to compete. Despite ongoing negotiations, trade talks with Canada have stalled, leaving these tariffs firmly in place. The lack of progress has frustrated both industry leaders and government officials, who had hoped for a swift resolution. Meanwhile, operational issues in Mexico, ranging from supply chain disruptions to plant shutdowns, have further weighed on the company's earnings. These setbacks have created uncertainty for workers and investors alike. As a result of these combined headwinds, financial analysts at UBS have slashed their North American EBITDA forecasts by a staggering 24%. This revision reflects the deepening challenges and the urgent need for strategic change. In stark contrast, ArcelorMittal's European operations are experiencing a more positive trajectory, with robust demand and fewer trade barriers supporting growth. The divergence between regions highlights the complexity of the global steel market. These regional imbalances cast a shadow over ArcelorMittal's overall prospects, making it difficult for the company to chart a clear path forward on the global stage. To restore confidence and improve performance, ArcelorMittal's leadership must find solutions to both the external trade barriers and the internal operational setbacks that are holding the company back. Ultimately, the path forward will require a coordinated effort to address both tariffs and operational hurdles, ensuring that ArcelorMittal can regain its competitive edge in North America and secure a more stable future. ArcelorMittal's Brazilian operations face shrinking profit margins. EBITDA per ton dropped from 124 to 85, signaling a tough market. A surge in cheap steel imports, especially from China, pressures prices. Brazil's government considers anti-dumping duties on Chinese steel. These measures could provide relief, but their outcome is uncertain. UBS lowered Brazilian EBITDA estimates by 13%, reflecting challenges. High import levels and uncertain government action cast a shadow. Regional weakness counteracts positive European developments. ArcelorMittal's prospects hinge on navigating these headwinds. In India, ArcelorMittal faces domestic oversupply challenges. Rapid production growth outpaces demand, depressing prices. India's crude steel output rose by 10.5%, creating market imbalance. This competitive environment limits profitability for producers. ArcelorMittal's joint venture in India struggles with market dynamics. Oversupply and price pressure affect earnings. UBS's cautious view reflects these headwinds. India's long-term potential is overshadowed by current challenges. Global weaknesses offset European strength, complicating the outlook. ArcelorMittal's third-quarter earnings beat expectations, but concerns remain. Net debt rose by 10% to $9.1 billion above the target. Rising debt increases financial risk and limits flexibility. Negative free cash flow of $538 million adds to worries. UBS forecasts a period of stagnation before slow recovery. Group EBITDA is projected to fall by 3% in 2025. Free cash flow yield is expected to reach only 4.6% by 2027. These figures suggest a stretched stock valuation. Investors should be cautious amid financial challenges. The company's financial health requires careful management. UBS's downgrade advises caution, not panic. The neutral rating suggests the period of easy gains is over. Current stockholders should reassess their positions. Potential investors are advised to be patient. The stock is fairly priced, with no compelling bargain. Better opportunities may arise with market improvements. UBS suggests exploring other European steelmakers for upside. Salzgitter and SSAB are better positioned for European benefits. ArcelorMittal's story is one of regional contrasts. Navigating global headwinds requires patience and strategic focus.